Let's examine the pros and the cons of using a 401k to buy a home. First off, you should know that using a 401k to buy your home is basically like borrowing money from your future self to buy a house now, and you'll be paying yourself back with interest over time until you can pay back what you borrowed from yourself. So the first thing you want to find out is, can you actually borrow from your 401k? So you need to talk to your employer or HR department and find the steps out to figure out that. And you need to know that there are a couple of penalties associated with borrowing from your 401k. So if you borrow from your 401k, then the loan will typically need to be paid back in 5 years. And you'll be paying interest on it while you do so. But the good thing is that the interest is be paying yourself back. But you're also missing out on the tax benefits of having a 401k. And if you decide to leave your job, then the full amount that you borrowed from your 401k must be repaid in full before you file your taxes for the year where you left your job. If your plan allows you to take out the funds early rather than borrowing against them, then you're gonna have a 10% penalty for withdrawing from your 401k before you're 59 and a half. It's also a maximum loan withdrawal. So you can only take out $50,000. It's something that could be used for a down payment, or it could be used to cover some of your closing costs if you are in a pinch. What are the pros of borrowing from your 401k? Well, the first pro is that it's basically borrowing money from yourself rather than borrowing it from a bank or another lender. Besides the fees that it costs to take out money from your 401k, if you were to withdraw money early, that 10% penalty fee, your employer will stop matching your contributions to your 401k until you've paid back that loan in full. This could also affect your debt to income ratio if you decide to apply for a mortgage. Of course, you'll be missing out on a lot of that compounding interest that you would be earning if you just left everything in the 401k until it's paid back. Really, you'll just be missing out on any contributions that you would be paying yourself. I have to pay some penalty fees, some interest depending on the specifics of your 401k, lose out on the compounding interest that you would actually be acquiring if you didn't take out the loan, missing out on your company matching your 401k contribution. You might find yourself in a bind if you decide to switch jobs because you'll have to pay off that loan in full. Essentially, borrowing from your 401k is basically like taking a loan out on your future self. It freezes your 401k until you pay back that loan in full. You could miss out on a couple years of growth if you decide to use your 401k to buy a house, either for a down payment or to cover your closing costs. My name is Nicole Bowdle, and I am a local real estate agent in Park City, Utah. If you liked this video, please check out my playlist over here. And if you want more useful, helpful tips, please consider subscribing and smash that like button.